Hi, welcome to the podcast, HOA Hell. I'm your host, Michael Kushner, and with me today is Senior Associate from MBK Chapman, Sam Kill. Sam, good morning.
Good morning, Mike. How are you?
I'm great. Thank you very much. Today, we have a complicated topic, but it is one that could save our listeners tens of thousands of dollars.
Oh, yeah.
Okay? We're going to talk about the truth about HOA insurance and why relying on your HOA's insurance policy could cause financial ruin. Okay? So let's break it down. Before there was part of our breaking it down, though, I do want to kind of define some terms, okay? Because there's a lot of misunderstanding about what these terms are. So, do you live in a condo? Do you live in a townhome? Do you live in a planned development? Do you have a single family home? These terms are used sometimes interchangeably, and some of them are, but others are very different. Right. So let's break down what's what, okay? Condominiums, you own the airspace inside your unit. Basically from the paint in, that's yours. You, as an individual homeowner, do not own the building in which your condo sits. You don't own the roof in which your condo sits. You own a part of those things, okay? You have just like all the other owners together that live in the same complex, you guys all own that stuff together.
Right.
But your separate property interest is paint in, okay, in your unit. Now, that's a condominium. A planned development, a PD, okay, you usually own the lot and the structure, and the HOA maintains common areas, okay?
Yeah.
So that probably sounded a lot like a single-family home, a detached home, because all detached homes, single-family homes, single-family residences are planned developments, okay? For purposes of our discussion, they are. Now, so you have condos, okay? Single-family homes clearly are PDs, planned developments. And then you have townhomes, which are the other most common type of multifamily housing. Right. And those fall into either one of those categories. Townhomes are either classified in the actual, in the public record, they're going to be classified as condominiums, even if they're not stacked and they only have neighbors to the left or right or behind, let's say. And the people in that building might own the roof, which isn't the case in a condo where that's common area. But they can still be classified as condominiums. Right. Or they could be classified as PDs, like a single family home. In which case the roof would be owned by, let's say there's a duplex. They'd be owned by the two people. You know, so let's say your HOA is made up of a bunch of duplexes, townhomes, but you're not classified as condos. You and your fellow building mates would own the roof together. It probably wouldn't be owned by the HOA. Whereas in a condo, the HOA is going to own that roof. Right. Okay. And when I say own it, I mean you all own it, but they're going to be responsible for maintaining, replacing, repairing. Right. So those are the most common types of homes that we're going to be talking about. Okay. Co-ops are a different thing. They're not as common in California as they are on the East Coast. If you're from any of the Commonwealth states or New York, you're going to see a lot of co-ops. But in California, they're rare. But a co-op, you actually don't even own the real property. You own shares in a corporation. And we're not going to get into that because it doesn't really matter for purposes of today. Okay? So here's a simple way to think. A simple way to think about it. Okay? All condo projects and PDs and co-ops and single-family homes, which are part of PDs, they're all common interest developments in the state of California if they're governed by an HOA. Right. and there's a board of directors and all that, okay? But all you have to remember for today is condo, planned development, and a townhome will fit into one of those. That's really all you have to know, okay? So, and I kind of think of, when I'm trying to remember that, it's like that old thing, all thumbs are fingers, but not all fingers are thumbs.
Right.
Okay. Okay. So the legal distinction is important because it's determined who's responsible for ensuring the roof, the walls, the floors, the foundations, whatever. Okay, that's why that's important for today. And I'm going to include in the YouTube description, try to remind me to do this. I should probably remember this. I would like to include a table that breaks down the differences between those. And if I forget,
that would be good. Yeah.
I hope a listener will let me know and I'll add it. But I'm going to try to remember to do that, okay? So what is insurance supposed to cover? Now that we've kind of defined our terms, let's talk about what insurance is supposed to cover, okay? So most homeowners assume that the HOA's master insurance policy covers and protects them from everything, right?
Not the case.
It's not the case,
No.
right? It depends on the type of development you live in based on what kind of insurance you're going to have.
Right.
So, and it depends on what your HOA's decided to purchase. And we'll get into that in the next section. We're going to talk about what the law, you guys are going to be shocked about this. What do you think the law requires? Let's say we're talking about a condo. I wonder if you guys know what the law requires your HOA to have in terms of insurance, because the answer to that in a few minutes is going to shock you. But in general, condo associations typically insure the entire structure, okay? And the exterior, and when I talk about the structure, I'm talking about the roof, the exterior walls, maybe the windows, depending if they've shifted maintenance or not, right? And sometimes the shared plumbing and electrical.
Right.
Okay? That's what typically occurs, and that's good. And your insurance policy that you should have on your own separate property interest should insure everything that you're responsible for, including pipes that go directly into your home and everything inside your paint, right? Okay. In planned developments, like single-family home or townhomes that fit into that, the homeowner will insure all the elements of the structure because they own the structure.
Right.
Okay? And the HOA will only insure common area elements. So if there's a clubhouse, the clubhouse. Tennis courts, the tennis courts. The pool, the gates, the roads, if they own any streets, stuff like that. Okay? That's typically what happens.
Yeah.
And that's the case most of the time. So what does the law require? What do you think the law requires?
Well, there's a common misconception on it, but the law, if we're talking about the Davis-Sterling Act dictating HOA requirements
For insurance, yeah.
for insurance purposes, it really does not make it compulsory. It does not require
Let's
insurance.
talk about a condo.
Yeah.
Condominium, you own paint in, they own everything else, walls, windows, roof, they're responsible for all that. He just said something. I hope you heard that. Nothing in the law requires your HOA to have any insurance whatsoever. Nothing. Nothing. Some of you might be going, what? That's ridiculous, and panicking. Well, wait a minute. It's true the law doesn't require it, but most CC&Rs do.
That's right. Yeah.
Most CC&Rs do require your HOA to cover with a certain amount of insurance those elements. Now, if your CC&Rs are silent on insurance, then your board could decide it's not worth the money, let's not spend it, and that would be a massive disaster. Okay?
Big problem.
All right. So the shocking news is there's nothing in the law that requires anything related to insurance coverage.
First time I came across that, I was baffled.
I was baffled too.
Especially in California.
I was baffled, especially in California when we have earthquakes.
Right.
And we seem to have a lot of fires. So, that's a problem. But fortunately, most HOAs have insurance because their CC&Rs require them to have insurance. That's a good thing. Now, once your HOA has insurance, if it's complying with its requirements, with this, whatever the governing documents say, then those probably will include minimums and different types.
Right.
And then your HOA must carry those, or the board is breaching fiduciary duty. But it's mandated by the CC&R. So if your CC&Rs only talk about, let's say, general liability, then that means your HOA doesn't have to have earthquake insurance or flood. I think it's given by FEMA, right? They don't have to have flood insurance. They don't have to have earthquake or anything else that might be excluded from a particular general liability, including balcony. We've talked about in our balcony episode that some insurance companies are slicing that out, right, of what used to be covered under general liability. In other words, to be covered, you'd have to have a rider, right? So if your CC&Rs, for example, only talk about a master policy, civil liability policy, and your insurance company in the last few years, because of the new balcony law, your insurance company has carved out balconies, you are going to have to go to your HOA and strongly petition them to get that rider because it's no longer covered. And the CC&Rs didn't contemplate that, did they?
No. Yeah.
The CC&Rs didn't keep up with what happened. It couldn't have contemplated the fact that 20 years down the line, after collapses and failures to maintain, the state of California would pass a balcony law, and insurance companies would react by slicing things out.
Right.
So it's up to you guys. That's part of what this episode is for, to put you on alert to do that.
And unless you do that, those policies specifically disclaim those components. I mean, you said it.
Even though it was covered for years and years, but next year when it's time to re-up, oh, by the way, from now on, we don't cover balconies.
Right.
We don't cover any elevated elements.
Right.
It's like stairways, deckways, and balconies. If they do that, and your insurance or your CC&Rs don't specifically require coverage of those elements. Now, if it did, if your CC&R said you must cover all common areas, and that used to be covered by a master policy, which now no longer does that, then your HOA would have to get the riders, because in order to cover all common area, they would have to get a rider because it's been excluded. So you got to look at your governing documents, but that's on you guys. Make sure that what's being obligated to be covered is being covered and in the correct amounts. If it says, minimum $1 million and your policy is $500,000, you have insurance, but you're not in compliance.
Yeah.
That's all very risky to you, because guess what happens if there's a lapse of coverage or under coverage, and the roof has to be repaired because a tree went through it, or fire gutted a building, with 20 units. Guess who's paying when the insurance company isn't there to pay? You guys. It's called a special assessment, and you guys are paying. Okay? Because if you don't, you lose everything.
It's painful, yeah.
So that's what we're here for. We're here to tell you about these things. Okay? Now, what most HOAs get wrong, and what most of you guys don't know. Okay? A lot of HOAs do what we just talked about. They underinsure. But they do so either intentionally or unintentionally. Intentionally would look like what?
Well, intentionally, they avoid that responsibility, even though their CC&Rs may say otherwise. Obviously, we've established that.
Let's say $1 million minimum, and they decide, it's expensive.
Yeah, exactly. And a new board comes in, for instance, they want to do things substantially different from a prior board. Guess what? Go in an entirely different direction in dereliction of their duties.
Right. Or let's say dues were, I'm making this number up. I'm completely making this number up. But let's say dues were $10,000 a year, and then now they're $20,000.
Yeah.
And so somebody on the board gets a bright idea to go, well, $10,000 used to buy us $1 million in coverage, and now $20,000 will buy us $1 million, but we don't want to spend $20 because then we're going to have to raise dues every year for the next 5 years. So let's just get $500,000 in coverage for the same $10,000.
Right. They don't keep up with the rates and change them.
That violates the CC&Rs.
It does.
And if it does, that's a breach of fiduciary duty, and that's a big problem. And that's when you guys have to step up, because again, who's responsible? You are.
Yeah.
But more importantly, or no, I would say equally important, that lack of that failure or that cutting in coverage gives you the false impression that you're protected, because every year, they have to give you the deck sheets, right? For the policy. Oh, we're covered. We're good. But nobody looked at the amounts. He just cut the amount in half.
And they're not always easy to read either.
No, they're not.
You have to look closely.
They're designed not to be easy to read.
Yeah.
Insurance companies don't want it to be easy to read. But the problem is that you get these crafty boards that are trying to save money, and it's penny wise and pound foolish. They want to save $5,000, $10,000, but not paying attention to the catastrophe that could occur if the worst case scenario happens, and now everybody's on the hook for $25,000 or $30,000 a piece to cover that destroyed building, which there just isn't sufficient coverage for. Or the insurance company terminates that from the regular policy and the board doesn't realize that. And the board's broker isn't doing their job. They've already got their commission every year, re-sign up. They don't want to do more work for it. So unless you have a really good broker who's paying attention and saying, hey, by the way, guys, what your policy used to cover XYZ, pay attention now because that's been excluded. And then the board is supposed to, okay, then what do we do to make up that shortfall? Well, there's rider A, B, and C. Don't count on your board handling it like that. And don't count on your broker doing that. You guys have to make sure of it. It's only once a year, but you guys need to make sure that this is being done. Because if you don't, and something happens, you no longer have earthquake coverage, and an earthquake happens and the building's destroyed, special assessments all around. And if you don't pay those, you lose your home. It's that simple. So you can't allow that to happen.
No.
Same thing with a pipe bursting.
Right.
Okay? Or even as values rise, as property values in California, especially certain parts of California, tend to go up and up and up, there should be a reassessment of insurance coverage, right? Because if they're substantially more expensive to buy supplies and
That's a
to
great
hire
point.
contractors, then it's going to be a lot more expensive, right? You should always be looking at the coverage.
So true.
That's what a broker's supposed to do. But we know that brokers really don't do their jobs a lot.
And perhaps good legal counsel, too. Advise the boards.
See, I don't... Good legal counsel, it'd be nice. We certainly would say something if we represented boards. I think that would be on our radar. But I'm not going to put that on lawyers. We're not brokers. We're not insurance people.
Right.
I'm not licensed insurance broker. I don't know. I know probably more than the average homeowner, but I'm not an expert on insurance.
That's a good point. Yeah.
So I don't want to put that on the lawyer. It's the broker's job. It's the board's job too. It's the board's job to know what they don't know and talk to their broker. Because I can guarantee you this, when I renew my home insurance every year, I talk to my broker. Hey, is there anything I need to know? Has anything changed?
Right.
Is this policy covering less or more? Or do I need to raise? What are people doing? I ask it only is a 20-minute conversation every year, once a year. But I ask my broker over at State Farm, okay, what do I need to know? Has anything changed? Is anything not covered?
No.
Or is there anything that I need to cover that I haven't covered? Do I have any gaps? I ask my broker that. It's that person's job to know. So when you get that pipe burst or that tree through the roof, or you have a roof that's just coming apart, massive leaking, maybe it was construction defect, whatever the case is, somebody has to pay for those repairs immediately. It's either insurance or it's you guys. That's it. There's only two places that money comes from. Okay? Insurance, great. Not insurance, it's you. That's what you got to avoid. Okay? So let's be clear. Not every pipe bursting in the wall of a condo, for example, is going to be the HOA's responsibility.
No.
If it's actually off the main line into your unit,
Right.
that's your pipe. That's your damage. Okay? So your insurance should cover it. And we're going to, at the very end, I want to, I'll do it now and let's move order.
Okay.
You should have insurance. If you don't, you're probably violating your mortgage or it's probably required under your mortgage, or might even be, depending on the nature of your mortgage, you might actually have a, what do they call it?
So required component to it.
No. When they take it out for you.
Force place insurance.
No, but that's not the term I want. Anyway, it's slipping my mind.
Okay.
But you're probably required under the contract that you signed with your bank to carry insurance. But if you're not, if you own it outright, okay, it's insane not to. You got to have insurance. You got to have insurance to cover not only what happens if things break on your end, but also if things happen, if somebody gets hurt or something like that. You've got to cover not only your property damage, but you've got to cover everything that could happen. Flood, too. That is not normally covered. That is separate insurance. Make sure you have it. Because what happens in a lot of these fire areas, when the fire burns, even if it doesn't touch your house, you're totally safe. But then the next rain comes and all the mud comes through the house. That's flood. Okay, that's not a burst pipe. Burst pipe isn't flood. Burst pipe is burst pipe. That's always covered, right?
Right.
But a flood, that's not a burst pipe. That's a separate kind of insurance. Got to have it. Earthquake insurance. A lot of people don't have it. You should have it. We live in California. We have earthquakes. There's going to be a big one. You should have it because you don't want your biggest asset destroyed and then have no way of being compensated.
Yeah.
Okay. So let's talk about earthquake insurance and the big gaps because it affects us that have single family homes. It's going to affect people with condos and townhomes. It affects everybody, depending where your place is. Talk to the people back when I was in right in law school. I think it was in the 90s when we had that huge Silmar or what was it, that Cal State school that had a big earthquake in California. It was like a 6 point something or maybe even a 7.
Loma Linda? No.
Maybe it was the Loma Prieta. I don't remember which one it was, but Cal State, Dominguez Hills or something. One of the Cal States was affected there. Lomita or I can't remember. Maybe it was that one. But this was in the late 90s, mid to late 90s. But a lot of people didn't have earthquake insurance, and I'm not laughing because that's bad, but you want to have it.
No, it's rough.
Insurance.
Yeah.
Because if it's just a minor earthquake, nobody cares. But if your unit's totaled, it's totaled. That's your entire. I mean, you're still paying that mortgage, folks. So you don't get forgiven if your place is totaled. Bank still wants their money. Okay, you're still on the hook until that property's paid off. They don't care if the structure's there and you're living in it.
Right.
Okay, so have insurance. Okay, now let's talk about HOA policies. Okay, you know what? Let's talk about something called HOA 6 policies. How about that? Have you heard of that?
HO6, yeah.
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 HO6 policy is a term that I would bet most people have never heard of. Okay? And it's a special homeowners insurance policy designed for condos.
Right.
So multifamily, but where the HOA owns from the paint out, right? Okay. HOA 6 policies to me are a must. Okay? Your HOA should have an HOA 6 policy. And those cover things like interior finishes, okay, on common area, floors, counters, cabinets, right? Personal property, loss of use, liability coverage, etc. You guys get the HO 6 policy on your own policy.
It's huge.
Okay? The HOA, I don't think the HOA gets the HO 6 policy.
No.
I think the homeowners are the ones that get the HO 6 policy in a condo. Because if something happens let's say there's a flood that occurs on the interior of the wall, okay, from a common area pipe and destroys your personal property. If that pipe bursting in the wall, which is common area, was not the result of negligence on your HOA's part, they're going to still be liable to fix the inside of the wall, dry out the mold or whatever, fix the pipe at their expense. But they're not going to be responsible for your floors or your piano or your antique or your couch or anything that got damaged because of the water. Because unless they had reason to know about it or it was negligence on their part, they're not going to be responsible for your personal property. But an HOA 6 policy would cover all of that stuff for you. Your floors, your cabinets, your piano, your whatever, okay?
Yeah.
And single-family homes don't need that. You guys just get your own coverage. It covers everything because you own the whole structure, okay? In most cases, the HOA's master policy won't cover that stuff because it's not designed.
Right.
Now, if it turned out as a result of negligence, that pipe was leaking for a long time and it was about to burst and they ignored it,
That shifts it.
they're going to be liable for your floors, your cabinets, whatever, but it will probably be under the D&O coverage.
Yeah.
I would imagine.
Yeah. Well, it goes to directors and officers' negligence or oversight.
That's probably why, where it would be covered.
It's still a fight, but yeah.
It's going to be a fight. But the HO 6 policy, if I said HOA 6, I didn't mean that. I apologize. The HO 6 policy is designed for you to have protection when the damage isn't your fault.
Right.
When it arose from something that was common area, but it affected your personal property, and there was no way to shift the blame to the HOA.
Right.
That's the takeaway for HO 6.
One important note.
Yes.
They're rarely required.
It's never required.
Right. I mean, I've seen maybe perhaps one or two instances where they kind of make it almost, they sound it
You'd be the mortgage
mandatory.
lender,
Right. Okay. But what I would say, strongly urge everyone to get these.
If you live in a condo or a townhome that's defined as a condo, you need to have an HO6 policy. And if you don't, talk to your broker immediately. You don't have to wait till the end of the year. You can add anything you want anytime you want. Call your broker today and say, do I have an HO6 policy? And if you don't, how much is it and what will it cover? Get it today. If I lived in a condo, I would have an HO6 policy.
100%, yeah.
And between the two of us or the three of us, your broker should have told you about the HO6 policy. Because your broker is supposed to know about those. We're lawyers. We're not supposed to know that. Okay?
Yeah.
Brokers are supposed to know that. All right. Now, D&O coverage. We just mentioned it for a minute.
Right.
What is D&O coverage, Sam?
Well, D&O in short stands for directors and officers. So D&O coverage, in contrast to the general liability coverage, is intended to cover directors and officers either misconduct. Well, I should be careful with that because it's a caveat there.
Well, to a certain limit.
To a certain limit.
Kinds of misconduct.
Right,
That's
exactly.
Correct. You're correct.
But essentially negligence. I mean, that's what it comes down to. If they are in breach of their fiduciary duties, engage in some kind of negligent conduct, do not work or operate at the behest of consultants to make necessary common area repairs, and you sue them or go after them for liability and damages, then
this will protect their personal.
This will protect them, and they'll typically tender to their D&O policy, in addition to the general liability.
Right. And it'll sometimes include, like if they're sued individually, it'll provide a reservation of rights and a defense.
Exactly.
Okay.
Yeah.
And then depending on how things go out the end, the insurance company will figure out how to shake loose who owes what. But the fact is that the D&O coverage is exactly what he said it stands for. It is to protect directors and officers.
Right.
For the wrongdoing they commit. Now, he was hedging a little bit because he was running into the issue, which is certain things aren't covered. We all know that. You know, if a director goes out and doesn't like another homeowner and takes a baseball bat to the person's car, I guarantee you that's not going to be covered under D&O policy.
Intentional acts like embezzlement, self-dealing, illicit conduct. It's not.
Illegal conduct like that, and acts of violence and maybe even gross negligence, depending on the policy. But the fact is certain intentional torts are not going to be covered.
Right.
Okay? It's supposed to cover just basic negligence and wrongdoing that doesn't rise to a certain level. Okay? That's in layman's terms. So it won't cover like that direct act of violence. We saw that video.
I was just thinking of that.
Actually, it hasn't aired yet. So we won't talk about it. But we have a video coming up that's going to be... No, it did air. We have a video of the spotlight on a director from hell. You guys should go check that out. It is, I think, our most exciting video. Had that assault that he committed grown into a battery, that D&O policy would not have covered him for the damages that would have ensued.
And he clearly went beyond the scope of what
he already did. Yeah. In fact, his conduct probably isn't covered anyway, but it definitely wouldn't have been. But it also, you brought up embezzlement and self-dealing. Okay, if a director, is writing themselves checks, and then somebody catches him on it, and there's a lawsuit against the HOA, rightfully so, and against the director personally, by the way, the insurance company's not going to even provide a defense, and isn't going to provide a defense not only to the individual, but it's not going to be covered under the HOA's policy. It's just not going to happen, okay? If there's intentional knowing violations of the law, so your lawyer, your HOA's lawyer tells them, you guys can't do this, you need to do it this way, and they go, puh, and they do it the way they want, that's a knowing violation of the law. Or gross negligence. It's negligence on steroids, okay? So gross negligence is often not going to be covered by D&O. But your HOA should absolutely have D&O because those directors need to be covered. Because otherwise, guess who's paying when something goes wrong? If somebody else sues the HOA under an agency theory, because the board's acting on behalf of the HOA and there's no D&O coverage, you guys are getting specially assessed.
Not fair.
Money's got to come from somewhere, people. So if your HOA doesn't have that coverage, you're not covered. That means special assessment territory if the worst happens. The whole point of this episode is to explain to you from the top down, one, your HOA isn't required by law to have any insurance whatsoever. That being said, most sets of CC&Rs do require some insurance. To the extent yours doesn't, I would work really hard to amend. And I would also, I would make it very, I would petition my neighbors and my board. We need to do something about this. Mm-hmm. But if it doesn't require it, then I would find out whether your HOA has it anyway. And if they don't have it, they better get it. If your HOA is underinsured, you need to make sure they are no longer underinsured. You need to look at what's required in the CC&Rs and make sure they have it. If they are operating below that, that is immediately fixable. Mm-hmm. It's illegal because they're violating their CC&Rs. Yeah. We can help. If they are underinsured because things have changed and they're technically in compliance, that doesn't mean they shouldn't get more insurance. The point of this episode is to tell you that it is a real problem out there because of the soaring cost of insurance. A lot of HOAs are taking shortcuts, and it's on you guys as homeowners, condo owners, even single-family residents. If you've got assets like pools and tennis courts and streets, it's on you guys because if something happens, somebody has to pay to get it fixed because you can't leave it broken. You can't not repair. Mm-hmm. That's illegal. And therefore, the check has to be written because contractors aren't going to work for free. You guys, it's all on you. So if I could impart anything to everybody today, it would be check your governing documents, find out what's required insurance-wise, and confirm that your HOA is at the very least meeting the minimum. Then confirm whether or not something's changed so that the minimum is still sufficient. Mm-hmm. Because either scenario could lead to disaster.
Right.
It's all on you, the homeowners, because I can tell you from personal experience as an attorney in this area of the law for almost 30 years, I can tell you, and I'm sure Sam would agree with this, there's very good chance your HOA isn't doing their job because a lot of HOAs, they just don't know better because they're made up of regular people and they don't have access to podcasts like this. Mm-hmm. So for the love of God, please do your due diligence and make sure that your HOA is covered because when they're covered, you're covered. And lastly, check with your broker about an HOA 6 policy. Make sure you have one if you live in a condo or a townhome that's classified as a condo. Mm-hmm. And I think we've done our good deed for the day.
That was good,
okay?
Yeah.
So look, we're done. If you like this episode, please hit the like button. We do appreciate it when you do that. And also please subscribe to the channel. We really appreciate it when you do that. If you have any questions or comments or you just want to say something, we do read those. And we do like to get them and I try to reply to them as well. Until next time, have a wonderful day.